Warren Buffett. I mean, when you hear that name, you think investing, right? He's the Oracle of Omaha, the legend. But behind all that folksy wisdom, there's a philosophy that's actually super simple but incredibly powerful. And today, we're going to crack it wide open. All right, to really get this, let's start with a number, a huge number, $100 billion. That's how much cash his company, Berkshire Hathaway, just keeps on hand. And look, that's not just a rainy day fund. Buffett calls it a fortress, ready for absolutely anything. This right here, this is the foundation of a mindset that is totally different from pretty much everyone else on Wall Street. So that leads to the big question, right? In the middle of all the chaos, the stocks going up and down every second, the so-called experts shouting predictions, the endless breaking news. How does the greatest investor in the world really think? I'll give you a hint. It has nothing to do with secret formulas or crazy algorithms. It's all about looking at the world in a completely different way. So here's how we're going to break it all down. We'll start with the Oracle's secret. Then we'll hit the three main pillars of his strategy. Ignore the noise, buy the business, and own it forever. And finally, we'll wrap it all up with the Buffett takeaway, what all this means for you. Okay, let's jump right in. The Oracle's secret. What is the code behind the world's greatest investor? Well, it all starts with understanding what his company, Berkshire Hathaway, actually is. You see, for over 50 years, Buffett has been at the helm of Berkshire. And here's the thing you have to get. Berkshire isn't some hedge fund just trading stocks. It's a holding company that owns entire businesses, companies like Geico and Dairy Queen. And that is the absolute key. He thinks like a business owner, not a stock trader. That one little shift changes everything. And that way of thinking brings us straight to the very first pillar of his strategy. And trust me, it's a big one. You have to learn to just ignore all the noise. Buffett says it best himself. He said that in over 50 years of working with his partner, the legendary Charlie Munger, they have never, not one single time, made a decision based on an economic prediction. Just let that sink in for a second. All those forecasts, all the talking heads on TV yelling about where the market is going next, he just tunes it all out. And this is where you really see the stark difference. The typical investor, they're glued to their screen, watching daily prices, stressing about the latest economic news. What does Buffett do? He calls all of that entertainment. His whole approach is way simpler. Find a great business, figure out what it's really worth, and then try to buy it at a fair price. Simple as that. Everything else, it's just noise. He has this great way of explaining it. He says, look, if you were going to buy a McDonald's franchise in your town, would you try to time your purchase based on this year's GDP growth? Of course not. You'd focus on whether it's a solid business that's going to be making money for decades. And that's exactly how he sees every single stock. So if you're supposed to ignore all that noise, what do you pay attention to? Well, that's pillar 2, buy the business. It's not a ticker symbol, it's a real company. Now, this is one of his most powerful ideas, and it's kind of mind-bending at first. He says if you have to follow a company really closely, you probably shouldn't own it. Think about that. If you feel that urge to constantly check the stock price, to read every single news article, it probably means you don't understand the business well enough in the first place. A truly great investment shouldn't need you to babysit it. And to really hammer this point home, Buffett uses this brilliant analogy. He says that when you buy a stock, you're not just buying a little piece of data on a screen. You're buying a farm. Yeah, a farm. You buy it for what it's going to produce over the long haul, the crops, year in and year out. You don't sell the farm because of a bad weather forecast, right? You focus on the long-term productivity of the land itself. And get this, it's not just some story he tells. He actually owns a farm that he bought way back in the 80s. And he's only been there once. Once. He doesn't need to go. He knows there will be good years and bad years, but his entire focus is on that long-term yield. So when people ask him about his massive stake in a company like Apple, he says it's the exact same thing. Apple is his farm. It's a productive asset he plans on owning for a long, long time. Which, of course, leads us perfectly into the third and final pillar. This is where it all comes together. This is the ultimate long game. Own it forever. His default holding period? It's not a year. It's not 5 years. It's not even 10. It's forever. When Berkshire buys a business, their starting intention is to never, ever sell it. It's such a simple rule, but the implications are just profound.
Because think about what that does to your brain. When forever is your timeline, it totally kills any impulse to speculate. You stop asking, what's going to happen next quarter, and you start asking the real questions. Does this business have a real, durable advantage? Can it survive anything, recessions, new tech, you name it, for the next 50 years? It absolutely forces you to only focus on the best of the best, the highest quality businesses out there.
Okay, so we've gone deep into the mind of a billionaire investor. That's great. But what does this all mean for you? How can we actually use this stuff? Well, it really just boils down to these 3 steps. Step 1, just stop watching the noise. Make a conscious decision to stop letting daily news drive your choices. Step 2, think like an owner. Before you invest a dime, research the business like you're thinking about buying the whole darn thing. And step 3, invest for the long haul. Ask yourself, would I be comfortable owning this for a decade or even forever? If the answer is no, you move on. And there's one last super important idea that ties all of this together. Buffett calls it your circle of competence. It's a really simple idea. Only invest in things you genuinely, truly understand. He famously passed on Amazon early on. People call that a huge mistake. But you know what he says? Nope. It was outside his circle, outside of what he knew. The real mistakes, he says, are the screw-ups you make on things you thought you understood. So that leaves us with one last question to think about. A question for you. When you look at what you're doing, are you really investing or are you just watching the noise? The answer to that question, well, it might just be the most important financial decision you ever make.